Welcome back. You're watching Business Morning on Channels Television. We'll continue our conversation on the devaluation of the Naira and how it's affecting the economy. I've been having a conversation with Henry Igbiki. He's the regional managing partner, Ernst & Young. He's still here with me in the studio. Thank you so much, sir,
Thank you,
for sticking around.
But
just before I went on that break, I know I said something about allocations, the Federal Accounts Allocations Committee distributing or disbursing monthly allocations in dollars, but it's actually in Naira. So I
yes,
correct,
I think so,
I correct myself. But then, the states are asking that $2 billion be taken out of the excess crude account and added to their monthly disbursement because they want to offset and take care of current projects they have in their various states. Is that what they should be looking at this particular point in time? Or like you already mentioned, they should focus on generating income internally?
Absolutely, you're right. That's what I said earlier. What are the states doing with all the money that they've got in the past? There's no investment in infrastructure, if you look. So I think it means they're not seeing the picture. They don't even see what is coming. And that is why the challenge we have with politicians. So they should see the picture, they should see what is coming. And now they should actually look inward and see how they can invest in infrastructure and not, getting allocations to pay recurrent, expenditure, to pay salaries. So the kind of money you're looking for now is the money to invest in agriculture, the money to invest in industries, in infrastructure in the state that can drive economic development. This is the time to tighten our bets and cut our cost.
Okay, so
and they should lead. The leaders should lead by example.
But before now, should they have taken the option of borrowing? Because you remember at the beginning of the year, the Debt Management Office said we actually had a good borrowing threshold. So should the states have actually looked at that option or maybe borrowed before now?
Well, you can only borrow to invest. These guys don't have investment culture. So what are they going? If they borrow to fund a recurrent expenditure, that just makes it just like you borrow money to go to the market and buy food to feed the family. So where's the return going to come from? Where's the return going to come from to repay the loan? They don't have the investment culture. So it's when they have projects, infrastructure projects that they want to fund, they can borrow to fund that, but many of them don't think. I can tell you, I'm not a politician, but I can tell you most of the money they are clamoring for now is focused on the elections, campaigns and elections.
So at the end of the day, even if they do take those monies, they might not.
There will be nothing, no consideration for it. There will be nothing to leave behind, especially some of them that are nearing the end of their tenure. It's probably something to take away.
Well, some market watchers are actually saying that the CBN might not really have the capacity or the capability to control the market. Some are actually saying that the regulator should move the official rate to 200 Naira to the dollar. Do you share the same view?
No, I don't. I think we need to be careful so we don't, out of panic, kill the Naira.
Could you expatiate more on that? Because you see, based on, we've been talking about speculative trading since the beginning of this conversation, and we know it's going to definitely continue even after the elections. Speculators will remain in the market.
Yes.
As of yesterday, at the black market, the Naira was trading at 190 Naira to the dollar.
Yes.
And it's not a particularly comfortable or cushy situation at the moment. And so maybe to further alleviate that happening, the central bank should have moved the exchange rate band to 200 Naira.
No, I don't support that view. I think, as I said, I think the panic is going to play out, and then you see some stability returning. And I think what we need to do now is to focus on the fiscal issues, not further devaluation, not further, because that's what's causing all this panic. So what we need to do is focus on the fiscal issues, the structure, investing the right, making the right investment, and cutting our cost, and then see how it plays out. I don't support now further devaluation just a week after you've done the first one. It will send the wrong message. Maybe not
in the short term, maybe in the medium to long term.
It will send the wrong message.
So now let's also look at the global oil prices. So as of this morning, at least the oil prices are trying to stabilize slightly over $70. As of yesterday, it was about $68. But some energy analysts are actually forecasting that oil prices might get to as low as $40 a barrel. And, like you've already rightly pointed out, we actually depend so much on it. The accretion from the oil receipts goes to the external reserves and goes to the excess crude account. But looking at how, you know, the market is, do we have the right fiscal and monetary policies in place to ensure that the economy is actually protected?
I think what the minister has said, if we do that diligently, but again, there is a concern as to our ability to stick to what we say we've done. So, I mean, what we said we are going to do. Some of those measures, like cutting costs. It talked about, you know, reducing the travel cost, but I think the size of our governors, as I said earlier, is still too large. They need to do further pruning. I don't have a view as to how the oil price is going to play out, to be honest. It's like shooting in the dark. So I don't know how low it's going to get to. But I think one should be concerned about how we address the structural imbalance in our economy that makes us so vulnerable.
And in terms of addressing those structural challenges, isn't it time for us to go back to the drawing board to look at it? Okay, fine, analysts are predicting that oil prices are going to get to as low as $40 per barrel. Our benchmark is saying $73 a barrel, which we are hoping that will be, you know, further reviewed in light of what the development.
Yeah, I think what the minister was saying that they've done some scenario planning already. They've done some scenario planning, taking various positions, assuming the oil price gets to this level. This is what they will do. Assuming it gets to this level, this is what they will do. I'm looking at her pedigree. There's some trust, some confidence that also gives to the people. And as I said, if they do what they say they are going to do, that means there's already some focus on what they need to do when, if the worst happens. So
on a need-to-do basis now, should for instance, central bank, not further devalue the Naira, but maybe take a different stance and have an emergency meeting to review the monetary policy rate or even the cash reserve requirement?
I think they will continue to do that already. You know, even when they devalued the Naira, they already also raised the MPRO to 13, which means the lending rate is going to go up. Inflation, that may also cause some inflation. Cost of funds is going to go up. That will also have negative impact on the production capacity of the manufacturing companies. We've been shouting that the manufacturing sector is down because the cost of borrowing is too high. Now again it's higher, so that's going to have a negative impact on them. So it's a mixed kind of, it's some very negative consequences that we see in the market. But again, I'm sure in the long term, if we do what we need to do, focus on the right measures, I think in the long term probably the economy should come up stronger. But it's if we fail to take those measures. So I see opportunities in this adversity.
Well, for the entrepreneurs, now should be a good time for them to, begin to see how they can access that 220 billion naira MSME fund that was actually, launched by the government to help them. Because if you're going to get, a loan and the interest rate is so high, why not take the better option where the central bank is telling you, come take this one for a lower, lower interest rate, and the state governments are also, partnering and, keying into this project. So maybe we should begin to, or they should begin to focus on the real economy and see how they can, stabilize them.
Absolutely. I think the federal government also launched a venture capital fund on the back of your win some weeks ago. We had the privilege as EY to work with them to establish that fund. That's also a very good one to drive entrepreneurship and then support entrepreneurs to establish their business, to expand their businesses. And this is what we're talking about, because that's the only way the economy can grow. That's the only way we can drive economic development in this country.
Well, going forward, what should we be expecting in the short to medium term?
I think we should be expecting hard times in the short term. In the long term, as I said earlier, if we focus on restructuring the economy, cutting our costs, being as lean as we can be, and cut all the fats, as far as expenditure profile is concerned, both at the state government level, at the federal level, even our personal, consumption partner I talked to earlier, I think there's light at the end of the tunnel.
Well, thank you so much, Mr. Igbiki, for sharing your thoughts with us this morning on the program.
Thank you, Harriet. My pleasure.
I've been speaking with the regional managing partner of Ernst & Young, Mr. Henry Igbiki, and we've been looking at still looking at issues on the devaluation as regards what's happening at the forex market and what's happening generally. Of course, like he said, Nigerians need to brace themselves for tougher times ahead. But we know that the Central Bank of Nigeria and the monetary policy, Ministry of Finance, I beg your pardon, are working hard to come up with policies and measures that will ensure that Nigeria does not go into disarray, does not fall, because we know that we're supposed to be very strong at this particular point in time. Global oil prices are dwindling, yes, but then the Ministry of Finance says there's no need to panic, and even if the prices of oil get to as low as $60 a barrel, Nigeria can still rough it. Well, that's the program for today. Thank you so much for joining me on the program. Also, thank you so much for sending in your comments as well. Hope to take them in our subsequent programs. But thank you. I'm Harriet Agbenyi. Bye-bye.